Hello and good evening, everybody. Welcome to today's webinar. It's brought to you by Bursa Malaysia-𝑖, and basically the topic for today is how to create a Sharia-compliant investment portfolio, right? And yeah, because it's going to be based on Sharia compliant, but today we're going to talk about how you can build a portfolio with minimal capital, right? And that involves investing in ETF. I'm going to explain to you as well the ETF, what the ETF is all about, right? And you know the performance of the Malaysian ETF and how you can actually invest with as low as capital as possible. All right. So welcome everybody. Thanks for joining us tonight. Right. Thanks, Jatinder. Hey, Jason. Your time to tell already. Hi, Emily. Hi, Aru. Hi, Florence. Good evening. Good evening and welcome. Yeah. Okay. While we are waiting for the others to come, I hope you are able to share uh, this session to your friends or to your Facebook so that others may benefit from this session as well. All right. So I hope that today's session will give you an overview how you can actually start, if especially if you do not know where to start or do not know how to start building a portfolio. The ETF is one of the best ways to actually start building a portfolio. Okay. Now, in fact, you don't even need to build a portfolio because the ETF itself is actually a portfolio or a basket of stocks. Right? So all you need to do is invest in them, right, and let the professionals or the fund managers invest in it for you. Yeah, but I think one of the concerns is people be asking about what kind of returns that we'll be expecting, right? So that's why today I'm going to take a look at the what kind of returns that you'll be expecting if if you invest in the ETFs offered by Bursa Malaysia, especially those who are uh, who are looking for Sharia compliant investing or ETFs. So today that's what we're going to talk about. All right. Okay, let me share my screen. Okay. Yeah, thanks for sharing. Thanks for sharing as well. Hi, Faisal. Hi, Jimmy Pang, Adrian. Thanks for watching. Okay, guys, I think I'm gonna do something on the audio because this happens all the time. We just Okay, so if you can hear me now better, can you just say yes, audio is clear so that I can start. All right. Hopefully it's better right now. Okay, so if you can hear me now better. All right, awesome. Thank you, Jasper. Okay, all right. Now we are set to go. Okay, so first of all, as usual, whatever that is being shared here today and being discussed here today are based on informational and educational purposes. It's not intended as any investment advice whatsoever. All right. So should you want to look for an investment advice, please do look for a professional and licensed investment advisor. Okay, and bear in mind that this event or this webinar is brought to you by Bursa Malaysia-𝑖. All right. So I want to thank Bursa-𝑖 for the opportunity to actually run a series of webinars for people who are looking into a Sharia compliant investment in Bursa Malaysia. All right. Okay. Now, do you think that you are able to own a basket of stocks or portfolio with a capital as minimal as 1,000 ringgit, right? Can you invest in a basket of stocks? Because if you think about like 1,000 ringgit, how many shares can you buy? right? Or can you even build a portfolio with 1,000 ringgit? Okay, or even with 600 ringgit or 500 ringgit, how can you build a portfolio? All right, so I'm going to share with you what are the ETFs available. I will not be able to cover all of them, right? But I'm going to focus especially those on the Sharia compliant ones. But I'll also show you the performances of the other ETFs as well. All right, so that you can have an idea what to expect when you invest in the ETFs. But of course, past performances does not guarantee future returns, lah. All right, so you have to be careful of that. But over time, okay, as long as the investment still makes money, as long as the market still, depending on what market you're looking at, whether in the equity markets or whether you are looking at gold market or so on, because different ETFs have different underlying assets, all right, so which I'm going to explain in a short while as well. Okay, so how do you start with 1,000 ringgit, right? That's the question. Okay. Now, so why invest in stocks? I think we have already made this clear why investing in stock is one of the better alternatives than investing in other markets, right? Stock performance over the years is one of the best performing asset class as compared to the others, like even properties or even gold or even for a US dollar or forex. Stock market is one of the best performing ones, right? So we already covered that in the previous webinars. And if you want to, you can actually look at the recorded webinars, right? So we already run a series. This is the fourth one, if I'm not mistaken. So we already run 3 of these webinars, okay? And all of them is connected. So you have the from the beginning until the end. We have actually 7 webinars altogether for this Bursa-𝑖. All right. Yeah, Daniel, definitely. We also talk about some of the drawbacks on ETFs, right? Okay, so now we know that we can invest in the stock market to get returns, but the question is, should you invest in, let's say, one stock, or should you invest in a basket of stocks, right? The thing that is sometimes a lot of people, especially in the stock market, I've been providing a number of talks and training for many years, right? And especially when people go to seminars, because they always want to know what stocks to buy the next day, right? So a lot of investors, a lot of traders, basically mostly speculators, right? They like to go to market outlook kind of seminar, so that they get tips or they get reports or buy calls from analysts to tell them what to buy on the next day, right? So if you can, for example, just buy 1 or 2 stocks, then you put all your money in one, then of course the chances of making money if the stock goes up will be much bigger, right? But what happens if it comes down? Okay, for example, just recently, right? If you just buy one stock, for example, like glove counters like Supermax or like Harta Lega or even Top Glove, right? In just a matter of 2 or 3 months, you probably easily return about 100%, right? We can even go to 200 or 300% returns. But the question is when we talk about investing in the long run, okay, can this be sustainable, right? So yes, we may get this very wonderful window period where you get opportunities like this, right? So I mean, the COVID-19, it's a pandemic, it's a threat, but it's also an opportunity for some, right? So of course the opportunities are those in the health sector, and rubber glove makers were benefiting from this. So of course glove companies, okay, like Top Glove or Harta Lega and so on, they benefit from this, because if you look at their orders now, it's like crazy lah. Their demand is so strong, right? So but this only happens in this window period, okay? Now imagine one day, if let's say the vaccine has been found, what do you think will happen, right? Or over the time, probably the demand will start to come down, because there'll be more people who'll be producing rubber gloves, okay? So competition will become higher as well. There are many things can happen, but this window period create opportunity for these companies. So question is, will this happen again in the near future, or even in the far future, right? So how do we have a consistent way of making returns in the market? Okay, because the moment, if let's say one stock price comes down, then your whole portfolio will go, all your capital will go bust. Okay, so there is of course advantages and disadvantage of having a portfolio or a basket of stocks. than just focusing on one or two stocks. All right, but of course, the benefits of having a basket of stocks is more than the benefits of having just one stock over time, right? I mean, if you look at most of the fund managers, if you look at most of the successful investors, they don't believe in investing one stock, right? Over the long run. So I'm just going to take a look at when you try to diversify your portfolio, you don't just depend on one stock performance, right? The thing is that if you don't, let's say, diversify, your performance of your investment is only based on one counter. If the counter don't perform, then you don't make money. Okay. And the other thing is that sometimes when you buy or focus on one counter or one stock, you may miss opportunities, right, from other counters that may be moving. Okay. So, and also, of course, the usual advantage is basically, if let's say one stock comes down, but because it's a basket of stocks, other stocks that go up, okay, may cover the losses for the stock that it comes down. Okay. So we need to have this balanced portfolio, right? Okay. And of course, to build a portfolio, it requires a lot of knowledge, a lot of skills, a lot of experience as well to build a real portfolio to get the returns that you want, right? So how do we start, right? And the best way, of course, to start is by investing in a portfolio of stocks itself. Okay, so which is basically an ETF. So this where I'm gonna share more with you in a short while. All right. And the other problem with diversification as well, it requires higher capital. Okay, for example, let's say you want to invest in some of the blue chip stocks available here, right? And normally blue chip stocks or or high market cap counters, their prices are all quite high. So if you buy, let's say, even 100 shares for each of these counter, it requires nearly 9,000 ringgit. Okay, that's a minimum investment of 100 ringgit, right? And if you want to double up your investment, right, with the same portfolio, you can only double up your total. Okay, so it's 9,000. To get the same effect on the portfolio, you have to put in another 9,000 ringgit, right, to get the same effect. So every 9,000 ringgit, to increase your portfolio. So that could be very difficult to manage. Okay, so how much, if I have less capital, then definitely it's very difficult for me to invest in a portfolio of stocks. Yeah. So how do we build a portfolio minimal capital? So we're going to talk about exchange traded funds. Yeah. Now, what is an exchange traded fund? So it's basically like a unit trust or a mutual fund. I think you guys know about unit trust and mutual funds, right? It's basically a pool, a money which is pooled together, okay, by a unit holder. So basically, the person who manage the fund is called a fund manager. He will accumulate, or he will fund, or he will put the one amount of money for investment, and of course he sell these investments into smaller units so every investor can participate. All right. And of course, if the funds keep on performing, they some of the ETFs, they provide them back with the dividends. All right. Or sometimes the dividends are being factored into the price itself. Okay. So it's basically a unit, but when you want to buy a unit trust or a mutual fund, you actually have to go the person who issued that fund, right? Or maybe through a financial planner who sells you that fund. Okay, so there are basically advantages, and of course disadvantage as well, trading or investing in ETF as compared to a mutual fund. So the thing is that for ETFs, it's actually like a unit. I mean, it's basically a unit trust and mutual fund. The only difference is that these are traded in the stock market. All right, so you don't need to, like, if you want to sell your unit trust, you have to go back to the issuer and sell it back to them. Okay, but in ETF, if you want to sell, you can just sell it in the market. Okay, just you put your price that you want to sell in the stock exchange or Bursa Malaysia, and if someone wants to buy it from you, they'll buy it from you. Okay, so it's basically traded in the stock market. So there are different kinds of ETFs, right? Because it's a fund, and that fund can be used to invest in many different vehicles, right? So here we have stocks. Of course, this the ETF fund is basically used to invest in the different types of stocks, okay, which I'll mention in a short while. Or the ETFs can also be invested in commodities, right? Gold, right? Of course, Malaysia right now, you only have one ETF, which is gold, commodity ETF. Okay, but of course, in the other markets like US, you have many different kind of ETFs, like commodities, right? You have crude oil, you have you have the other, not just gold, but also other metals, precious metals, and also metals, right? Of course, there are also ETFs on bonds that invest in bonds. There are also ETFs that invest in derivatives like futures markets and so on and so forth, right? So I'm just going to basically share with you what are the ETFs available in Bursa Malaysia to give you an idea, right? Okay, so I'm going to just play this video to just show you what ETFs is all about. Basically, this video is from Bursa Malaysia. This gives you an overview. Well, some of you have probably watched this video already, but I'm just going to play it so that you are able to look at it, all right, to understand further.
Have you heard of exchange traded? Have you heard of exchange traded fund, or ETF in short? No? Well, we have, and we're here to help you to bust the myths and learn the facts on ETF.
Have you heard of exchange traded fund?
www.bursamalaysia.com.
No. Well, we have.
Have you heard of exchange traded fund, or ETF in short? No? Well, we have, and we're here to help you to bust the myths and learn the facts on ETF. ETF is so confusing and puzzling to me. Hey, relax. ETF is not rocket science. It is really easy to understand. Is ETF the same as individual stocks? If you own an individual stock, it signifies your ownership in one listed company. But if you own one ETF, it represents your ownership in a portfolio of securities. Everyone loves having more. Is investing in ETF risky? Every investment in general has its risk. As ETF consists of a portfolio of securities, the risk is relatively lower than investing in an individual stock. So if the prices of a few stocks go down, it may be offset by the increase in prices of other stocks. Now, let us share with you the benefits of ETF. ETF is cost-effective. Why? ETF does not have a service charge and comes with low management fees. All you need to pay is only brokerage fee. Yes, ETF is flexible. You can buy and sell ETF easily as it is traded on Bursa Malaysia. Just pick up your phone and call your broker or simply trade online. Now, that's what I call flexible. ETF offers the benefits of diversification. Gain regional and international diversification just from one ETF investment. Let's go global. Much like water, ETF is transparent. Prices are available throughout the trading day. What's more, your investment portfolio is fully transparent. What you see is what you get. For more information, visit www.bursamalaysia.com.
All right. So let me go on. So I hope that you have an idea, about ETFs. And now just let me go through a review, because the video already explains some of the benefits and also the what ETF is all about, right? Now, so one of the benefits of ETFs is because most ETFs basically track an index. Okay, so basically you don't need to be active in your management. The fund manager itself makes sure that the fund, which is an ETF, basically moves together with the index that they are investing. So the index can be, it can be a KLCI index, for example. So the funds is basically trying to track the KLCI index. Or some of the funds will probably want to track, let's say, the Shariah index. Or some funds want to track the dividend index and so on and so forth, right? So there are many different index. Or there are index that the ETFs that basically track the price of gold, right? So basically, you just have to buy the ETF, and you don't need to manage it because the fund managers are managing it for you. Okay, there's no active management, so basically lower management fee, right? Of course, there is a fee for fund managers whenever they manage the funds, but they are relatively low. You know, if you invest yourself, right? Because if you put all the costs together trying to manage a fund, it's not going to be low, right? You need to have the systems, you need to have the data, you need to include your time and so on and so forth. So relatively, getting a fund management or for someone who's managing a fund is basically cheaper, right? So ETFs are listed on the exchange, so there is no sales charge. Unlike unit trust or mutual funds, when you buy from a sales agent, you know, they always include the sales charge in there. So the moment you buy that particular unit trust or mutual fund, you're probably down about 5% at least, right? Because the sales charge is normally about 5%. Yeah. Um, One of the other benefits of ETFs is, of course, the trading flexibility. You know, you can just buy and sell them anytime during the market hours, like any other stocks, right? Um, because if you're buying unit trust, you can only sell it to, let's say you want to sell it back, and you sell it to those, and you can only based on the price which is available on a daily basis. Okay, where not like in the stock market where prices are updated live, right? So you get more trading flexibility. You can sell it in the market at any point of time. You can buy it at any point of time. You don't need to go through an agent, right? Your agent is basically a stockbroker, which you already set up an account to trade, right? And of course, diversification, right? It's efficient and it's economical to diversify using ETFs because, like I said, if you want to build your own portfolio, for example, a portfolio of you want to track the KLCI, for example, you have to buy, the 30 counters, all right, and not just the 30 counters, and it has to be at the right weightage as well, right? So there are some counters maybe you have to buy more than the other. Okay, so that's why it's more expensive. Okay, so the other thing is that ETFs, you only require a small capital outlay because I'll show you the prices later on to give you an idea. All right. Okay, so and the thing about ETF is you're also able to select the ETF for a specific needs, or you want to select an ETF is specific in a market that you want to invest in. Okay, now REITs or property related investment it is not under ETFs, it's under REITs. It's real estate investment trust. It's a special it's basically like it's like a mutual fund also, but the investments are basically on properties. All right, so that's REITs lah. So today we're not going to cover REITs today. We're going to cover ETFs. Right, so this is basically a simple table that shows you the difference in the different asset classes that you can actually invest in, right? So ETFs, for example, is actually a diversified portfolio of stocks. The fees, all right, and all that is basically like a stock. It's like you're buying a stock, right? Of course, you buy a single stock, there's no diversification. There's only one stock, right? If you buy a unit trust, yes, it's diversified, but the management fee is normally higher. There's a sales charge. It is not traded on exchange, so you have to buy and sell through the issuer or through the intermediary or the broker, right? There's no intraday pricing. You only have end of day pricing. You can't trade intraday. And of course, in certain accounts, you are able to also buy on margin. Okay. So these are some of the differences, right? Buying a unit in ETF and a unit trust. Okay, so basically a unit trust, an ETF, is quite unique in a sense because it's like a hybrid between a unit trust and a stock. All right. Okay, now I'm gonna just go through with you some of the basically I'm gonna give you a list of all the ETFs available in Malaysia. All right. So there are I think about 18, or not mistaken. Wait, this one here is equity ETF. So I'm going to break down. There are 3 different categories. There's equity ETF. There is a commodity ETF. Okay, there is a fixed income ETF, and the other one is leverage and inverse ETF. Okay, so 4 different categories. Okay, so equity ETF itself, we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 ETFs altogether. All right, and not all of them are Sharia compliant. Okay. there are only 4 out of the 11 are Sharia compliant. Okay, so the first one, for example, my ETF Dow Jones US 50 Titans is Sharia compliant. Okay, the my ETF Islamic Malaysia Titan 25, that's Sharia compliant. The Malaysia Islamic Dividend Sharia compliant. Okay, and the Islamic Dividend is Sharia compliant. So all of this from IVCAP. IVCAP is a fund management firm. So the word I there is Islamic, right? So they mostly invest in Sharia compliant investments. Okay. And then of course there are from M funds, we have the KLCI ETF. So basically this tracks the KLCI, right? And we have a principal asset management where it focuses on Asian 40 Malaysia ETF, 40 um, Asian 40, right? Top 40. I'll show you where you can get the details of these ETFs lah. Okay, and then there's also a FTSE China 50 ETF based on the FTSE China 50 index. Okay, so these are, if you look at this, I know it's quite small, you look on the screen, but later I'll also share with you how you can actually download the slides. And but this information are all available. Okay, the source is there, it's from Bursa Malaysia. You can get all the information there, but I'm just putting them into the table so that's easier to see. All right. So we have another one, for example, a China ETF, which basically checks tracks the S&P New China sectors, okay, XA shares. Okay, so basically all tracks. You look at the right hand side of the column, that's the underlying index that is trying to track. All right. The bottom two is new, which is just listed today. Right, on Sunday we actually had a session with Ms. Chong Lee Chu, who is from Arvin Huang Asset Management, to explain what's the Trade Plus DWA Momentum Tracker, right? And we also talk about the REITs tracker for Asia, okay, ex Japan. Okay, so all of these ETFs are specific to an index normally, right? It tracks an index. Okay, so out of all of these indices, there are only 4 which are Sharia compliant, which is the top 4 over here. Okay, and it's all by IBCAP. Okay, and these are the listing dates. Some of them has been listed for a very long time. For example, like the KLCI index by M funds is from 2007 July, 19th of July 2007. Okay, some of them are pretty new. For example, like Trade Plus, New China ETF or New China Tracker, which was last year. Okay, and of course the 2 new ones, which is the Momentum Tracker and the REITs Tracker, is just launched today, right? Today itself. Okay. So later I'll show you what's the performance like, right? Before we go further. Now there are also fixed income ETF. We have the ABF or M Funds Malaysia Bond Index Fund. Okay, so the underlying is basically trying to track the market iBox ABF Malaysia Bond Index. So there is actually a bond index. Okay, but this is not Sharia compliant. Okay, commodity ETF. So there's only one fixed income ETF, which is the Malaysia Bond. Okay, so you can look at the details of the bond, what kind of bonds, and mostly are government bonds lah. Right. There's a commodity ETF, and it's basically on gold. So this is by Arvin Huang as well, Trade Plus Sharia Gold Tracker. The underlying index is basically the LBMA gold price. Okay, this is Sharia compliant. Okay, the gold tracker is a Sharia compliant. And then there are leverage and inverse ETFs. These are quite new ETFs. Leverage means you actually get a leverage on your investment. So here we have both Kenanga and Afin offering the different kind of assets. For example, Kenanga, we have the KLCI 2 times leverage ETF. Okay, so it's almost similar like the the FTSE Bursa Malaysia KLCI ETF by M Fund. Okay, but this has 2 times leverage. That means if let's say the index goes up 2%, right? KLCI lah. Let's say you buy KLCI, the KLCI goes up 2%. Your 2 times leverage ETF KLCI will normally go up about 4%. It's double. Okay, that's why it's leverage. Yeah. So of course, if it goes down 2% the other way around, if you buy the ETF, it can also go down 4% lah. Right. So it's a double-edged sword. Okay. So those who likes leverage and you like to track the index, but to give it a little bit more boost, then you can buy the ETF, right? You can buy the KLCI daily 2 times leverage ETF by Kenanga. Yeah, and the good thing is now we also have the inverse ETF. Inverse ETF basically means that you only make money when the price comes down. All right. So let's say the index comes down 5%, okay, and you bought that KLCI inverse, so your, the index come down 5%, but your price will go up 5%, right? So it's inverse. Okay, of course there are other things like New York FANG Plus index. The FANG Plus, all the technology stocks, the biggest technology stocks plus Tesla, right? So this index has been performing very well because Tesla prices has gone up quite crazy, right? It's now I think trading about $1,004. Okay, it was now, and I just read recently that Elon Musk now is worth more than Warren Buffett. Yeah. So there's a tracker for FANG Plus. There's a tracker for even the Hong Kong and China Enterprise, right? Which focus on Hong Kong and China shares, lah, right? So the different ETFs provide you exposure on your investment into different markets. Okay, but of course the leverage and inverse ETFs are not Sharia compliant, lah. Okay, now what you can do if you want to look at the details, the best place to go is to go to Bursa Malaysia. All right, I already provided a link over there on the slide at the bottom. So if you go to the slide, let me just show you a little bit. I'm just going to stop the screen for a while and share the other screen. Okay, so you go to Bursa Malaysia, you actually have this link here. You can see there's exchange traded funds. Okay, so all the funds are here, right? So if let's say I want to find out about this FTSE Bursa Malaysia KLCI ETF, I can just click here. Okay, I get the summary basically. Okay, but there's a website, the issuer's website, okay, that shows you more details. So if I click on this, for example, oops, I think I should share. Yeah, share this whole thing better. Okay, so when you come here, I can even look at the fund info. Okay, more details over here, lah. Okay, so it shows you the funds. You can even download the reports, right, or the historical performance, and see what kind of returns that you'd be expecting and so on. So I get most of the data basically from here, lah, right, from Bursa Malaysia's website. And of course, Bursa Malaysia website will give you links to the issuers. Okay, like for example, I can let's say take a look at I like the one that had the IV cap one, because it has more data which is easier to see. Okay, for example, this one. Okay, so I can look at the different ETFs. I go to the, let's say I'll look at the my ETF Titan 25, right? So I can look at this information. This is is created on January 2008. Okay, most important part is this performance part here, right? So I can look at the performance of the index, all right? And of course, I can also download their reports and so on and so forth. And you can also check whether they actually have income distribution. That means some of the ETFs do pay dividends. Okay, later I'll give you another table that shows you which one pays dividend and which one don't. All right. And of course, the dividends, is basically when they give you the dividends, they give you the income distributions. You basically get more units, lah. All right. So it's like a unit trust, lah. When there's a distribution of income, you get more unit or unit trust. Okay. Okay, so let me get back to my screen here. So these are basically the major ETFs, right? So the one that is Sharia compliant, there are 4, including the Gold ETF. We have 5 Sharia compliant ETFs. So for those who are looking for Sharia investments, later I'll show you, that I'm just going to put down the table for Sharia compliant ETFs to give you an idea. Yeah, guys. So if you have any questions, you can just type it down. So later, once I finish my, presentation, then we'll take a look at. I'll take a look at your questions. All right. Okay, so basically, with ETF, you can actually diversify without having very high capital, right? I mentioned to you earlier, even you want to buy, let's say, that 10 stocks earlier, you need about 9,000 ringgit. Okay, now if you are investing, for example, okay, let's say my ETF MSCI Malaysia Islamic Dividend Fund or ETF, okay, is only priced at 129. This is based on the 14th of July prices lah, right? So your minimum investment, basically, if you buy 100 shares, is only 129 ringgit. Okay, that's 129 ringgit to own a basket of 16 to 30 Sharia compliant companies. So the fund actually has a mandate to either invest between 30 to 30 stocks in their portfolio. All right. These are some of the top holdings, right? So Maxis, Petronas. Imagine if you buy each of these counted individually, right? Okay, now this is the important part, right? Because this is the performance of the ETFs. Okay, so if you look at the right-hand column, some of them don't pay dividends, some of them, they call it income distribution, right? Some of them, yes, some of them annually, some of them semi-annually, right? So if you look at the first example, for example, right? My ETF Dow Jones US Titans 50. All right, so these are basically 50 blue chip counters in the US, right? The price is only at 129. Okay, I'm going to calculate the return since its listing. All right, because some of them are listed only 2 years, some of them are listed 3 years, some are listed 15 years also got, 10 years also got, and so on, right? But what we want to see is the annualized returns lah. Okay. So here, for example, my Dow Jones, if let's say you bought it on the 28th of February when it was listed, okay, you hold it until today, and the listing price was 1 ringgit, right? And now it's 129, so you actually make 29% in about 2 years plus. All right, so if you calculate an annualized returns over 2.5 years for a 29% absolute return, then you get about 10.7% annualized returns. All right. Now, this one unfortunately does not pay dividends, so you don't have any income distribution for the US Titan 50. But if you are investing in the Islamic Malaysian Titan 25, right, 25 blue chip counters, the price is the same at 129. Okay, since its inception, this is 1 month earlier, about 1 month earlier than the Dow Jones Titans 50. All right, the listing price was 1 ringgit and it's now at 129. Okay, but this one has income. So the total income distribution for the 2.5 years, okay, that means the dividend received is about 0.67 cents. Okay, so your total returns, if you take your capital gains plus your income distribution, is 35 or 35 and 7 cents. Okay, that gives you a 35.7% returns, absolute return since the inception or since the beginning. Okay, so annualized is about 13%. Okay, but here we are talking only about 2.5 years performance lah. All right. Now then we have the Malaysia Islamic dividend. The current price is 132.5. All right. That gives you a capital gain of 32.5 cents from its 1 ringgit. But bear in mind, this one here starts from 2014. So this is already about 6 years. All right, more than 6 years. Okay, so in that 6 years, you take the capital gains, which is 32.5 cents, plus the income distribution that you receive in the past 6 years. Okay, your total returns will be 48 cents. Okay, so since it's listing, your total returns will be 48 cents, including the capital gain, right? So you use your capital gain plus your income distribution, your total returns, your annualized returns is about 6.4%. Okay. The one that does not perform well is basically the MSCI Southeast Asia Islamic Dividend. So the Malaysian Sharia compliant stocks are basically much better, I guess, right, as compared to its Southeast Asia counterpart. Because this particular ETF has actually had a capital loss of 30%. All right, since its inception from 2015, it was 1 ringgit. Right now, it's trading at 70 cents. This is all based on the 14th of July prices. All right, so give you a 30%. But you know, these ETFs actually provide dividends. So over that 5-year period, you actually gain a 10 cents dividend in total. Okay, so that net off, you basically still down 20 cents. All right. So since listing, you're down 19.8%, including you receive the dividends, you're still down 19.8% over the period of 5 years. So annualized returns is minus 4.2%. Okay. So FTSE Bursa Malaysia KLCI ETF. Okay. Now this is not okay. After that my ETF, there are 4 of them. The KLCI ETF downwards, the fifth one downwards, they are all not Sharia compliant. All right. But I just want to show you the performance. Okay. So the KLCI ETF at 165, but this is from 2007. Okay. So that's about 13 years. So 13 years, your total returns, including the distribution of income, right, or dividends, will be 1 ringgit and 21 cents. Okay. So your investors 1 ringgit, you actually get back, including your capital gain plus your dividends, 120. So that's 120% returns, but over a period of 13 years. All right. So if you annualize it, it's about 6.3%. All right. The ASEAN 40 Malaysian ETF, okay, returns about 7.5%. The FTSE China 50 ETF returns about 5.6%. This is over a 10-year period from 2010. All right. The newer one, okay, the China Tracker Index. The China Tracker by Trade Plus is basically has US dollar and also in ringgit. All right. So you look at the performance, of course, it's about the same, but the US dollar, has slightly better returns because of the forex gain. All right. But the annualized returns over the past 2 years is about 26%, because if you look at China, the stock market now has rebounded very strong, right? If you have followed us earlier, you can see that over the past 1 month, the China market or the Shanghai Composite Index is one of the best performing index, right? Since the lockdown or the pandemic, right? So they have rebounded very strongly. Okay. So those are the kind of returns. So the smaller returns is basically the China 50 index. But if you look at the Malaysian stock market returns, right? If you look at the Titans, let's say 25, you get a 13% annualized returns. That's quite good, right? 13%. Okay, but of course this is over a period of 2 years lah. Okay, this is not long term yet, because this is just listed on 2018. Okay, the Islamic dividend, that means they're focused on high dividend yield counters, okay, which are basically Sharia compliant. Okay, that returns about 6.4%. So if you're looking for a more stable one, because this one is since 2014, right? So you already have a 6-year performance, okay, which returns about 6.4% annualized annually. Okay. So you have also the bond index. The bond index returns about 3.5%, which is bonds and FDs. Because bonds is slightly higher than FD, so you get 3.5% annualized returns. Okay, gold tracker, and of course 2017 was the listing date, and prices were low in 2016, 2017. Right now, the gold prices are trading at near or at the 8-year high. So that's why you see the returns has been very strong, right? Since 2017, if you bought this when they issued at 172 to now is at 2 ringgit and 48 cents, that gives you a 44.6% absolute return. Okay, if you annualize it over the 3 years period, then your annualized return is about 14.5%. Okay, I'm not going to show the rest of the inverse ETFs and so on, because those are still quite new. Okay, so, and of course we just want to focus basically on the Sharia compliant one. Okay, so I'm just going to share with you. So this is basically a no-brainer, right? Basically, you're buying the ETFs and you're letting it run by fund managers. All right. Like I said earlier, if you're buying ETFs, it's like buying a unit trust. So you don't trade ETFs, right? And if you read most of the prospectus of the ETFs, they always recommend you to hold at least 5 years, to see returns, right? Because if not, then you will not be able to see the returns, over the period. So it is for investment. It's not for short-term trading. It's not for speculation, because the prices don't move that much. Okay, so these are basically the Sharia compliant ETFs, right? We have the Dow Jones Titans 50, Malaysian Titans 25, Malaysian Islamic dividend or high dividend yield counters, and of course the Malaysia Southeast Asia Islamic dividend. Okay, so I guess if you look at the share price for the fourth one, which is the Southeast Asia Islamic dividend, it has not been performing very well. So maybe you want to take that off your list of investing, lah. All right. So we have gold tracker right now is at 248. These are all Sharia compliant ones. Okay. So basically, if let's say I want to diversify my portfolio with 1,000 ringgit, basically if you buy, let's say these four, right, minus the Southeast Asia dividend ones, You can buy at, you can have an exposure on 50 US market titans, 50 US stocks, an exposure on 25 um, um, high dividend yield counters in Malaysia, and you have exposure to 16 to 30 Islamic dividend giants, and you have an exposure to gold, okay, with just 1,000 ringgit. And if you buy, let's say, the minimum unit, in fact, let's say I'm going to buy even, let's say, sorry, I think I got the wrong one here, 200 units instead of 100 units for the first two, right? That of course gives you an investment of 258, and the total, if let's say you buy 2 units of, or 200 units of 50 titans, 200 units of 25 Malaysian titans, okay, 100 units of Islamic dividend, and 100 units of gold, the total your investment is only 897 ringgit. And of course, mind you add your broker fee, right, plus and minus, is still below 1,000 ringgit lah. All right. So the thing is that, no, you can buy 1 or 2 stocks based on the 1,000 ringgit that you have, okay, or you can have an alternative to have a basket of more stocks and exposure in different markets. Okay, for example, if let's say the US market is doing very well, but the Malaysian market does not do very well, then your investment in the US market, okay, may increase your portfolio returns. All right. Or even, let's say, stock markets generally are not doing well, but gold prices are doing well, so the gains, okay, or the returns from gold will be able to overcome the losses in stocks. All right. So if you have a diversified investment portfolio, your portfolio or your returns is not fixed on 1 or 2 counters, right? It is not fixed on one sector, or even here in this case, it's not fixed on one market. Okay, because you have an exposure in the US market, you have an exposure in gold, and you have exposure in the Malaysian market. Okay, so this is the easiest way to start lah, right? So I mean, you can always buy, and because it's minimal, you can always buy an ETF easily, right, as part of your bigger portfolio. Okay, and it basically tracks, right? And of course, if you want to build your own portfolio, okay, it requires more skill, it requires more experience. But what you want is, you want to build a portfolio that is, of course, better than the returns that is available here lah, right? Because if your portfolio does not have a return better than the returns that you see on these ETFs, you might as well just put your money in ETFs, right? So the challenge is, again, to build a portfolio. So that will be our next, I think, the next 2 topics: how to build your own portfolio, a Shariah-compliant portfolio. So stay with us. I think on the back in the next 2 weeks or the next 3 weeks. All right. Okay, so this ends my presentation. So I'm going to take your questions in a short while. So do follow Bursa Malaysia-𝑖 if you want to have more details, right? Go to their Facebook, their Instagram. Just search for ICM_Bursa for Twitter and Instagram, and just click or search Islamic Capital Market Bursa Malaysia on Facebook. All right. Okay. If you want to download the slides for today, please fill in the evaluation form, right? You will not get the evaluation form immediately, because we give enough time for everyone to fill up the form first, then we'll send the slides at one go. So it takes probably about a week before we send you the slides, all right? Or maybe a few days. So please do just key in this address. Okay, it's bit.ly/Bursa Sharia. Okay, then you get a form. Once you fill up the form, in the next, at least maximum in 1 week time, you will get the slides on your email. All right. Okay, so now I'm gonna come back here. I'm just gonna stop sharing my screen now. Okay, so let me go to your questions. If you have any questions, you can still ask those questions. We still have about 15 minutes before we end. Okay. Now, I know one of the worries, especially, and we addressed this as well in the Sunday session with Li Chu from Afin Huang. Right? One of the things is that people thought there's not much volume in ETFs, right? But bear in mind that because you don't see the volume traded in ETFs, because not many people actually invest in ETFs or trade ETFs. Most Malaysian retailers they like to speculate more than they invest, right? So the ETF is definitely not is for long term. Okay, so only a handful of people actually invest in ETFs. But bear in mind, there's always market makers for these ETFs. Okay, so you want to buy and sell, there will be some liquidity. If you need it, you can actually if you really want to buy a lot or sell a lot, excuse me, you can actually go even you can also go to the issuers, right, and ask them. Okay. I detected some irregular information on this video. True ETF does not have management fees, but they are all factored into the fund. Yeah, I mean, there are many kinds of ETFs, right? So Malaysia, of course, ETFs is run by the fund itself is run by fund managers. So if you go and look at the details, the one that I provide you the link, you can they are actually quite transparent on what kind of fees they are charging. All right. And of course, you don't see these fees they charge you, but it's like what you said is reflected in the fund. So when you look at the returns that I show you on the slides, it's all, it's the returns that you see is based on the NAV or the price of that particular fund or the ETF, right? And all the management fees and all that is already been factored into the price. All right. Yes, definitely there'll be spreads. Like Hongji, you're right, because there's a buy and sell price, right? So there is some sales spread, but of course, that's the reason why we need more liquidity in this market. If the market is not liquid, if you only have market makers, they are the one who actually set the price. Okay, and in a more active ETF, you normally see about a 2 or 3 tick spread. Okay, the price is about 2 or 1, or if let's say a RM1 stock is about 1 or 2 or 3 cents different. So there is still maybe 2 or 3% cost. All right. It's the same thing when you buy unit trust as well. When you buy unit trust, you also see the buy and sell, right? And of course, unit trust, the buy and sell spread can be much bigger than the spread that you see in the ETFs. Okay, the chart that you mentioned is let me see. Yeah. Okay, I think maybe we got confused a little bit on this. Okay, let me share this slide again. Okay, I guess it's this one, isn't it? That you guys are referring to. Okay, yeah. So basically, this one. Okay, you look at ETFs. You have to look at the characteristics. Here it says diversified. Yes, ETF is diversified. If you buy a stock, no, it's not diversified because you buy one stock, right? When you buy a unit trust, it's diversified because it's a basket of stocks. No low management fee or low management fees. So ETF has low management fees because there's basically no management fee because it's reflected into that price. You only have to pay the brokerage, right? So that's why there's no, right? So stock also no. Stock also got no or low management fee. Okay, unit trust, no. Unit trust, you have to pay a management fee. All right. So of course, in real terms, that management fee is also being factored into the ETF price or the NAV. All right. So there is also a management fee, but very low. All right. No upfront sales charge. This is true because your upfront sales charge is basically to your broker, the commission. All right. And if you go through, let's say, financial planners, or you go through a broker is selling unit trust, their sales charge is definitely higher than what the stockbrokers are charging when you buy or sell shares. All right. So no upfront fees or no sales charge. Yes, for ETF, you don't have sales charge for stocks as well, but in unit trust you have. Right. So that's why it says no. So it's basically like the opposite right? So traded on exchange, ETF yes, stock yes, but unit trust is not traded. All right. So I hope that clears that a little bit. Okay, and basically I actually got this from Bursa Malaysia in one of their slides, so should not be wrong lah. Okay. Okay, Steven, somehow this always puzzle me. Funds charge me 3.3 to 5% management fees. So it's the fund manager's day job to watch over the funds daily with his or her experiences and wealth data systems available to them. And yet I would say many funds perform weakly and some with dismal results, blaming exposed to political and economic up and downs. So aren't we investing in funds because we need the fund manager's expertise in the first place? Case in all the three funds I'm holding are underwater. Okay, it depends. It depends on when you buy that ETF as well, because ETF it also moves like share price, right? Of course, if you buy the peak, then then your ETFs is probably underwater, lah, right? So that's the reason why if you look at the prospectus, right, they encourage people to buy and hold at least 5 years. Okay, so of course, if you bought more than 10 years and it's still underwater, that means there's something wrong, lah. Because if I look at the returns earlier, right, on all the ETFs since its inception, okay, all of them should be able to make returns at least annually, right? For stock exposure, you get 6.5%, 6% returns, up to even 13% returns. Okay, the only one that is not performing is the Asian 40, Asian Islamic dividend counters. Okay, Southeast Asia, not Asian, Southeast Asia, right? But the others are making money over the time. Okay, and of course, if you just look at the prices, right? In March, when the market went down, you can see that you also probably go underwater. Okay, for most of them, especially the new ones. Okay, but over the time, the price, as long as the market continues to climb, okay, then of course your investments or your ETF will continue to grow as well. Okay, so over the short term, you will definitely have volatility. Okay, let me see the next question. Okay, Vignesh Worry, you ask Vignesh Warren, not sorry. Can we buy ETF with EPF like unit trust? Currently you can't, not at the moment. Hopefully that one day the ETF issuers will approach EPF to actually buy ETFs as well, but not at the moment. All right. For every ETF, do we have to invest or buy from respective fund manager? No, you can buy and sell them in the exchange itself in Bursa Malaysia like any other stock. So when you go to your trading screen tomorrow, you check out the ETFs, right? So you can actually buy and sell there itself based on the price that they quote. All right. Wonder how many can get listing price of $1. I think it's not fair to benchmark analyze return based on listing price today. Yeah, so that's why I did not give I did not show the returns for for the current new one that's just being listed. So I'm looking at those at least 2-3 years, that's already been listed for 2 or 3 years. Then you can actually analyze them a little bit. But of course, the annualize is just an average, right? Based on the returns since the listing, right? Again, it also depends on when you buy and when you sell it, right? So it's always good to actually have to benchmark a performance of that ETF after 5 years, right? So it's not also good to actually benchmark them after 2 years, after 1 year, because it's still too short to tell you whether that funds can provide the returns over the years, right? But some of them, of course, has been around for 10 years, 15 years, then that's not a problem, lah. Right? So you can't use the annualized returns or even, let's say, the dividend yield, okay, as a benchmark or as a tool to decide whether you should buy the ETF or not. All right, you should also look at other aspects like the market prospect, whether that particular asset, for example, whether like dividend, for example, or dividend counters, will they be able to continue to pay dividends, right? And there are many other aspects you have to look at, not just by looking at the annualized returns, because these are, like I said earlier when I started the presentation, right? You cannot look at the past performance to actually judge or to repeat in the future. All right, it's the same thing when we buy unit trust as well, right? The prospectus always is the same thing. That's the caveat, right? That's the disclaimer. Okay, past performance does not reflect future performance. Okay, but we just want to have an idea if, let's say, what happened if you bought that particular ETF since the beginning and until today. All right, just an idea. Yeah, so every day, Bukari, correct? You have to check the NAV because if you go to Bursa Malaysia's website, they always have this NAV. So when you buy and sell, make sure you don't buy it where the price is high above its NAV lah. All right, because again, if there's not enough liquidity in the market, there's not enough players in the market, then you have only the market makers there. They are the one who actually set the buy and sell price, and of course, market makers being market makers, they also want to make money lah. So the spread can be high, right? And it may not be very near the NAV price. So you just have to wait. You just have to. I mean, you can. You don't need to take the market maker's price. You can even buy or sell at the price that you want. Okay, and if the market maker thinks that is a price worth buying or selling at your price, they can buy or sell from you. All right, so not necessary that you want to buy. You can just put the quote there because the price don't move like, it doesn't move like glove counters lah. Right? The price like one day sometimes it don't even move, right? So you can just put at the price that you want, okay, and make sure it's near the NAV, because if you buy higher than NAV, then you expect higher returns or higher movement for the stock price to get back your returns. Okay. Would you say ETFs are risky, or different ETFs have different risks? The prospectus for the two new says they are individual with high risk tolerance. Yeah, not the two new. I think the one that is lesser risk is the REITs one. For this is for I guess you are talking about the ETFs today, lah, right? So that ETF basically, there are two kinds of ETF. One is based on momentum. So of course, momentum trading, momentum movements are more risky than, let's say, a dividend or a strong dividend play company, right? Because companies that pay dividends, consistently, their stock price normally don't move that much, right? They are dividend kings, but they are not growth kings, right? They are stable, they are steady, right? But when you talk about momentum ones, of course, they are more risky. All right, so definitely the first one where we have the momentum ETF, okay, from Avin Huang, has higher risk, and this is basically for those who have a higher risk appetite, right? Especially traders, and instead of buying one or two stocks, when you buy that momentum ETF, is basically buying a basket of stocks that has momentum. All right, so it's different. The other one is, of course, ETFs on REITs. That means that fund is actually buying REITs all over Asia except for Japan. All right, so that one is less risk lah, like I can say, because you remember, REITs itself is already a fund. So this is a fund buying another fund. Okay, so yeah, whatever it is, again, the risk, whatever. When the thing about stock market is this, right? Because actually the risk is really entirely up to you, right? If you buy more, of course, on that particular counter, then your risk will be high. Because whenever you buy, you have to remember that there are two things you have to consider, right? One is the price that you're going to buy. Second one is your position size, right? So if I have, let's say, 100,000 ringgit, and I put all my 100,000 ringgit on this one ETF or one stock, for example, then of course, whatever stock performance or ETF performance is going to reflect on my my capital, all my capital, because I put all 100,000 ringgit. Okay, but if I have 100,000 ringgit, but I only use 10,000 ringgit from my 100,000 capital to buy this counter, then my risk exposure on my capital will not be big. All right, so really it depends on what kind of risk appetite you can take. Yeah. Okay, some platform have restriction to buy ETF. Now, actually, the most of the ETFs does not have restriction except for leverage and inverse ETF. All right, that has a certain requirement that you have to meet before you can buy those shares. You have to talk to your broker, and they will tell you how you can get that exception. All right, but most of the other ETFs you can buy and sell them like any other stocks. Okay, so you see restriction is because it is an inverse or leverage ETF. Okay. Yeah. So yeah, the two new ones from Avin Huang is not leverage, right? If you look at the previous one, it was. Okay, Yat Lao. Can you show? Okay, I'll show you the link again later. I'll show you. Okay, Jerome already posted the link there. Thank you, Jerome. Okay, so Wong Hongji, you're actually looking at the ETF today. So momentum ETF started the day with 105, went down to 0.995 and closed at 0.25. Yeah.
If REIT ETF range only one, yeah, REIT is should be. I mean, it should not be as volatile as the momentum one, lah, right? Because momentum one based on price actions, right? REITs is more stable in a sense. Okay, so that's why you see the momentum one has more movements. All right, you expect the momentum one to have more movements, lah, right, than the other REITs. And of course, if you want more excitement, then you go for the leverage one, lah. Okay. But bear in mind, all of these are not Sharia compliant, right? The only if those who are looking for Sharia compliant one or ethical investing, then you should be looking at the 4 ETFs plus one goal, right? If you want to build your Sharia compliant portfolio, and these are more, I can say, a more stable portfolio over the long run, because if you are trading like leverage or inverse ETF, is basically for short term trading, right? It's more suitable for short term traders rather than long term investments. So if you are going into leverage or inverse ETFs, basically you are looking for more excitement. All right. You are looking for more probably shorter term objective because you don't normally want to hold a leverage ETF long term. Okay. But the other ETFs are all long term in nature. You don't trade them. Okay. The reason why these leverage and inverse ETFs is being created is because some people require this kind of higher risk, higher returns kinds of investment product. Okay, rather than just looking at the other conventional ETFs. All right. Okay, so again, ETFs is all depend on you, but what the message basically today is to share with you that if, let's say, you do not know how to start a portfolio of stocks and over the long run, but again, bear in mind that you will only see really good results or some results at least after a period of 5 years. That's what most of the prospectors are actually suggesting, or the fund managers are suggesting, because in 1 or 2 years time the market can be volatile, right? If you buy those ETF, for example, in March this year, when the market was bottom, you will get definitely good returns. I mean, you buy any stocks in March, okay, then you will definitely get better returns. So the idea is basically to share with you that if you do not know how to build a portfolio, Bursa Malaysia actually has this investment asset class called ETF for you to consider, right? Where you can have an exposure not just in one category, like I mentioned to you earlier, you can have an investment exposure in gold, investment exposure in, let's say, even in US, right, or dividend counters and so on and so forth. All right. So I hope that today's webinar are able to be, the purpose is to share with you what basically ETF is all about and how you can make use of ETF, and most importantly is how the performance of the ETF itself. All right. So because there are a lot of questions people are asking that what ETFs pay dividends and do ETF don't pay dividends, right? So like I put on the screen, all right, on the slides earlier, that there are some who paid and some who don't pay. Okay, so like I said, you can download the slides. I'll just show you the link again if you missed out, and I think Jerome has also posted the link there. What I'll do is I'll just type the link. Okay. bit.ly/Shariah. Okay, so let me see whether it's correct or not. All right. Okay, so just go there. Just go to bit.ly Bursa Shariah. Okay. Fill out the evaluation form and we'll send you the slides within 1 week. All right. So that being said, I think it's time. Thank you guys for joining me tonight, and hope that this has been educational to you. And we all should really consider looking at ETFs so that you get more liquidity, you get better prices as well. All right. So keep supporting the market, and I will see you again in the next webinar. Same time for Bursa-𝑖 webinars. We have it on every Wednesday, right? Oh gosh, I'm so forgetting the time and day after the MCO, right? So thank you very much, and I wish you guys good evening, right? And have a good night.